What's up guys? Welcome back to Money Crow, the channel all about making your money grow. This is the 7th episode of my 100K wheel strategy portfolio. I'm filming this video on Thursday, November 5th after market close, so it's been 45 days since I started trading in this account. I started on September 21st, 2020, and my account value, if I were to liquidate all my positions today, is $102,564.81. And the cash balance of the account, which counts all the collateral I used to open my positions, plus cash from premiums received, is currently at $103,372.31. Before getting into the trades, I wanted to address some things that were brought up in several Reddit comments in reply to my portfolio updates. If you guys didn't know, I'm posting these same updates that you see here first on YouTube every Monday on a subreddit called Theta Gang. It's a fantastic community dedicated to selling premium and talking strategy, and the wheel option selling strategy that I've been using fits right in. So jumping right into those comments, Buzz brings up a great point that I actually did address in my Reddit post before he had commented. I also addressed it in episode 5, which was posted last week on YouTube, and I did reply to him. However, since his feedback did receive a lot of traction as well as provoke some additional attacks, I wanted to bring it up again in this video to hopefully clear the air even further. Last week I titled episode 6 as my $103,938 portfolio revealed. He took offense to that and said saying you're up $3,938 in this account by looking at only the cash balance and completely ignoring your negative MTM is some stuff that Arthur Andersen wouldn't even approve. Just so you guys are aware, MTM stands for mark to market. It's a method of measuring the fair value of accounts that can fluctuate over time, such as assets and liabilities. And Arthur Andersen, in case you didn't know, was at one point a very large tax and accounting firm which went under for being negligent in the reporting practices associated with Enron. So this user is comparing me to a company that allegedly aided in defrauding their shareholders. He's saying that I focus on my cash balance and completely ignore my negative mark to market. However, in my Reddit post, I don't completely ignore that, and instead I clearly state that last week was definitely a turbulent one and the liquidated value of my portfolio has suffered a bit, but since I don't plan to buy any positions back at a loss, it makes more sense for me to look at my cash balance as a more accurate measure of performance, since that shows all the premium I've received. If/when I get assigned shares, I will look at cash balance plus market value of my equity. Due to me being a bit conservative with my trades in terms of strike price and also selling around 45 days to expiration, I don't see the portfolio as being in too bad of a position. So as you can see right there in the beginning of that paragraph, I do acknowledge the fact that the liquidated value of the account has suffered. In addition to that, I always post the same screenshot both in my videos as well as in my Reddit posts, which clearly show the fluctuating value of my account based on cash minus the negative value of my short positions, which in this case for the wheel portfolio are any puts or calls that I've sold. So you guys can see that I never hide any information. I replied to him by saying to some extent the same things I've already covered. I said, hey, I personally feel like it's a more accurate measure of the account's performance since it takes into account all of the premium I've received from selling puts/calls and doesn't get offset by the liquidated value if I were to buy back all those contracts. I don't plan to buy back any position at a loss, and most of my positions are far out of the money and have relatively long expirations. I'm not trying to mislead anyone, which is why I explained that in this post as well as in my recent video, and I've always shown screenshots of my account's true liquidated value. The original user never replied to this, but a different user, Vita Scola, brings up another point. It's not profit until you've realized it, which in this case would mean buying back the options. It's easy to be cash rich selling options but actually being down on the positions. NLV should be your benchmark, and using anything other than NLV to track your performance/progress is in fact misleading in my opinion. Just so you guys know, NLV stands for net liquid assets and pretty much refers to assets minus liabilities. I understand that you're wheeling and will be taking assignment of the stock, but even at that point, you'd be facing the loss that is strike price minus premium compared to actual stock value. As other people pointed out, you should probably not be doing weekly updates if you're not going to go off the NLV. You're doing 45-day expiration after all, so use that time to provide value over quantity, ? Happy Cake Day, by the way, Vita Scola. He did bring up some great points and probably had the most constructive criticism of this entire comment thread that was started by Buzz. However, I personally truly believe that looking at my cash balance is a more accurate measure for how the account is doing, at least on a weekly basis. And since these are weekly updates, it makes more sense to me to use this method of reporting. The cash balance you see is once again all of the cash collateral I've used to sell all my currently open puts, plus any remaining cash in the account that's not being used as collateral. And to me, that's extremely relevant for an account dedicated to running the wheel strategy. Based on all the trades I've done, many of them being realized gains and some of them still being open, this value represents the total amount of premium at this point in time that I've received. If I were to instead only look at the account value that Webull shows me with the graph, taking into account the negative value of all my open positions, my cash balance gets offset by that negative balance. The negative balance represents the amount it would cost me to buy back all my open positions that I sold. So to put this into perspective, as an example, if I sell a put and collect, let's say $50 in premium, the market value would show negative $50 and completely offset the premium I just received. I'm not arguing that I could potentially not keep the full $50 premium that I was paid after the contract lives through its expiration date. But at least for these weekly progress updates, I think it's more valuable to see the premium that I'm receiving and how my cash balance is steadily growing. If we were looking at this account over 1 year long periods, I completely 100% agree that NLV method of reporting for a long-term update like that makes so much more sense. But again, for these weekly updates on YouTube and Reddit, not so much. I sell relatively far out of the money options and they typically have an expiration around 45 days out. And I usually try to buy back my contracts once I can lock in more than 50% of the initial premium received. If a trade does end up going against me, I'm typically not going to buy it back at a loss, but if I do, that would be 100% reflected by decreasing my cash value. I'm eventually going to either buy back the contract or get assigned to buy shares in the account, and both of those events would show me the true end result of my trade and affect my equity position plus cash balance. And again, I think that's a much more accurate representation and it's not hiding anything. Regardless, like I said before, I always have and always will show all the statistics available for this account, and I'm never gonna hide anything. So if it makes you happier or you find more value in looking at a different number than the one I find valuable, by all means, please only pay attention to that number. Also, just to quickly address his final point about not posting weekly updates and focus on value over quantity, if you look at most of the other comments from that post, as well as the traction and positivity received from previous posts and the feedback I've received from my videos, there seems to be some demand for this, and it's personally very fun for me to make these weekly updates. I'm not going to stop posting just because a few people aren't interested. I'm going to continue posting because it's what I want to do and because there's a true audience that appreciates these updates. And that's all that matters to me. My audience is always going to be my top priority. Also, a monthly update would have resulted in about 50 trades being covered, which means my video would probably be well over an hour long. I prefer these constant bite-sized updates that still leave plenty of room for discussion and analysis of my trades and show the week-by-week progression of the account. On a more positive note, another user by the name of Au Contraire Zippy replied to Buzz and said, "Only because the ex-Wall Street Bets hive mind can only think in terms of gain and loss. He's pretty transparent and offering open insight into his trade methods. Wrong or right, nothing is underhand or hidden. I also don't see him trumpeting the situation, and he has been posting this way since he started. To be honest, I would rather see more like him here sharing this stuff for us to observe and learn from, and a lot less of the types who followed into this comment with zero value but noise. Seems more people who fall over at Wall Street Bets end up here as wasps. Some of those zero value, noisy comments he's referring to are these. To be honest, it's pretty funny to compare my conservative trades to selling premium on Tesla, but I digress. This other commenter says I'm horrible, and his words, not mine, says I'm showing amazing profits over a 5-week period, then proceeds to attack my intelligence. These are weekly updates that I've just started late September, and I'm personally very happy with the profits, but I've never boasted about them or claimed they were amazing. All that being said, it frankly doesn't matter what I think. It 100% matters what you as my viewer thinks. If you truly feel misled or upset about the titles of these videos showing the cash balance of my account instead of the net liquid value of my account, that was never my intention. I will immediately switch to instead writing the liquidated value of my portfolio in my titles if enough people express their concern in the comments. But regardless, as I've been doing prior to this, I'll continue to always begin each update with both numbers, and all my screenshots will continue showing both numbers in an effort to remain as transparent as I feel I have been since episode 1. I appreciate your opinions and regard them with a lot of respect, so please tell me your thoughts in the comments below. Thank you guys for hearing me out. Now to my trades. I made 5 trades since my last episode, and I'm excited to share the updates with you guys. Before we continue, I just want to give a quick shout out to my amazing Patreon supporters, our standalone Crow CEO, Jorge Ledesma, and our 4 Crow investors, Prismatic, Erica, Andrew Paz, and John Harden. Thank you all so much for your continued support. If you guys want to be notified immediately after I make a trade, consider supporting the channel on Patreon. I'll have all that information listed on there. Link is down below. Another easy way to help out the channel is by clicking my 3 different referral links so we can both get free stocks and free cash. For a limited time, Webull is giving away 3 free stocks, M1 Finance is giving away $10 in cash, and Robinhood is giving away a free stock like Apple or Facebook or many others when you sign up. Links are all in the description. Thank you guys. So let's jump right back into my portfolio. I started this account 45 days ago with a clean 100K, and you can see I now have a cash balance of $103,372.31. That excess amount is all premium I collected from running the wheel strategy. If you don't know what that is, please watch my explanation video. I'll attach a card right here. As you can see, my cash balance has decreased since last week. This is because I took advantage of the rise in the stock market this week to use some of that cash to buy back many open positions. This is a spreadsheet that my friend made for me, which helps me track a ton of useful information. I'll leave it on the screen for a few seconds, but please feel free to pause the video if you'd like to look at it more thoroughly. I've also left a link to the basic template in my description so you can make a copy of it and download it for your own use. And don't worry, it's completely free. However, if you want access to this exact version on the screen that I update in real time, I'm granting viewing access to all my level 8 and up Patreon supporters. So if you're interested in that, please consider supporting the channel on Patreon. Thank you guys again. This is the front page of my Webull account where you can see all my open positions. Again, I'm recording this on Thursday, November 5th after market close. I'm currently using $50,350 of my available cash balance as collateral. Due to the elections, the market has been very volatile, and I wanted to wait for a better opportunity like a down day before deploying the $53K cash that I have available. If you guys enjoy this type of content, I would really appreciate it if you like the video and subscribe to the channel. Thank you guys so much. Let's continue where we left off from the last episode. We're now on update 53 for my Patreon updates. In update 52, I sold to open one put for $81 in premium. I was able to buy to close it for $28 after only holding for 5 days. Deeper analysis of Walgreens is available in episode 6. Update 54, FB Facebook. I took advantage of their massive 7% plus rally on November 4th to close out my position. In update 50, I sold to open one put for $400 premium. I was able to buy to close it for $192 after only holding for 13 days. Deeper analysis of Facebook in episode 5. Update 55, XOM, Exxonmobil. I've held onto these contracts for a while, but they finally picked up some steam with the broad market rally on November 4th, so I decided to close them out. In update 33, I sold to open two puts for $95 each, which is $190 total premium. I was able to buy to close both for $27 each or $54 total after holding for 28 days. Deeper analysis of ExxonMobil in episode 3. Update 56, WYNN Wynn Resorts. These contracts originally lost nearly half their value within a few days of selling them, so it was really tempting to buy them back right away, but I decided to hold on a bit longer before closing them. It paid off because in updates 45 and 46, I sold to open two total puts for $355 and $400, which is $755 total premium. I was able to buy to close both for $116 each or $232 total. I only held those contracts for 16 days. Deeper analysis of Wynn Resorts in episode 5. Update 57 is our final update for this week. C. Citigroup. Citigroup is up over 5% in the past week, which presented a nice opportunity to close out my two contracts. In update 49, I sold to open two puts for $82 each or $164 total premium. I was able to buy to close both for $35 each or $70 total. I only held those contracts for 15 days. Deeper analysis of Citigroup is available in episode 5. So those were all 5 trades I made since last episode. I hope you guys enjoyed my 7th portfolio update with a bunch of great trades. If you have any comments, questions, or suggestions, please comment down below. I will be reading all of them. Follow all my trades on Patreon and get your free stocks in the description below. Thank you guys so much for watching until the very end. I hope you'll be back for future videos. And as always, please subscribe, hit the notification bell, like, and comment. Have a great day, and I'll see you next time.